For our AI score, we look at things from two perspectives. One is current status, then AI readiness is look at more potential. We believe there's tremendous opportunity just beyond NVIDIA and Max 7, right? So AI investing is for everyone. Just look at like what happened over the last 4 decades, right? You have to really be at front of the current wave of technology development to recapture the growth.
Is it too late for you to invest in AI? My guest today says no, and he's putting his money where his mouth is. He's Derek Yen. He's a senior investment strategist at KraneShares, an ETF company, and he runs an artificial intelligence ETF, which we'll talk about in a minute. But first, I just want to get his opinion on AI investing in general. Derek, welcome.
Thank you for having me.
Thanks for doing this. Let me start off with a skeptical question. A couple of years ago, I wrote an article in Forbes about how on Crunchbase, this is a website that shows mostly the funding of private businesses. There were like 20 or 22,000 AI companies. A year later, there were like, 60,000 AI companies. And I haven't looked, but maybe there are 70 or 80,000 AI companies now. Now, most of these are private companies. But my question is, how much fall off are we going to see? I know we've had 2,500 car companies come and go in the US. In the late 1990s, we had something like 900 e-commerce companies, and now we've got Amazon and eBay is tiny, right? We just got a couple. So I guess the same thing would happen in AI. How many companies alive now are going to be dead in the next couple of years?
We think like AI is not just like a tool, right? Like when you talk about AI company, everybody is claiming they're AI company, but like there could be AI infrastructure company or AI application company. Just looking at each technology breakthrough previously, right? When you have the kind of like PC era, you have thousands of software applications that develop. That's usually like we saw like software company. Then in the mobile internet era, you have thousands, 10,000s of applications built. Like those are real companies. So we think AI could be the next wave of major technology breakthrough. Then those thousands of companies is not enough. We're going to need tens and hundreds of thousands of companies to really build an ecosystem that's really like monetize this next generation of computing, right?
Interesting. So part of what you're saying, it sounds like, part of what you're saying is that AI it's like a way of life, or it's becoming a way of life in the way that software did. In the old days, you might have had software company and non-software company. You might have some specific AI companies, but you've also got a lot of just regular companies that are going to be using AI more and more. And so there's a lot of overlap. It's a blended area, which makes sense. But I guess my question then is, how do you invest in it? Like, how much difference is there with an AI fund compared to just a large cap tech fund?
Yeah, so with KraneShares, we realize that issue, right? There's a tremendous opportunity behind artificial intelligence, especially this wave of like Gen AI, large language model, and potentially AGI in the future. So when we look at the marketplace, there's no such investment vehicle for that. Then we launched our AI ETF, AGIX, to really capture this long-term opportunity by investing not only the enablers, but benefiters. And we have an AI score that we developed with the AI native investor engineers who invest into large language model, so they know the whole ecosystem. We have this AI score to really have a portfolio around 40 companies to invest in companies such as like AI chip, data centers, cloud data, model deployment, and AI applications. We think that's an approach that investors can really use to invest in AI at the current stage.
Interesting. Yeah, I'm just taking a look. Your fund it's only a couple of months old, but it's already up 13.5% roughly in those few months since it's been launched. And it sounds like you have an AI score. I was going to ask you, what's the smart way to invest in AI and what's the dumb way? I'm going to presume that you believe your score is the smart way to invest in AI. I want to first ask about that, and then what a dumb way to invest would be. But it sounds like you have some criteria or some methodology, which I'd presume you'd need if it's an ETF, right? It has to be some kind of a rules-based metric. without giving away your secret sauce, how do you score these companies?
Yeah, I think just like for just ordinary like average investor, people just look at AI investment opportunities through either like single companies, they just put a tremendous risk on one or two companies, or they look at okay, let's invest in Nasdaq or like semiconductor industry. But when we look at like the performance of AGIX, so since inception we have outperformed both Nasdaq and semiconductor industry ETF. So that just shows like a framework that's centered around AI is very important. So for our AI score, we look at things from two perspectives. One is current status, which is we call it AI relevance. So AI relevance is like how relevant the company is to AI from the current revenue generated from the AI, and also this AI product is ready. Then another angle we look at is AI readiness. Is look at more potential. So how much the visibility is for its future AI revenue, and also its business model is ready for the AI. So we actually last Friday we held a conference at Nasdaq with some of the portfolio companies like Palantir, Duolingo to talk all about this framework and how their business model is ready for the future AI disruption. So that's our framework to invest in AI.
So to simplify it in layman's terms, sort of like how AI-ish is this company now and in the future? If we look ahead, like how big of a part of their revenue stream is AI going to be? Do you have any of the utility stocks, like the independent power producers? You know, we've talked on this program, and although other people have talked as well about these IPPs selling cheap nuclear energy into the grid, and some of the big tech companies are trying to buy up that power for many years in advance to power AI searches. Is that part of your AI score, or are they too far off on the side to count?
When we look at the allocation of the AI industries, we have currently about 40% into AI hardware. So AI hardware means like semiconductors regarding the AI chip design, chip manufacturing, AI memories, and also data center. For data center, we have like cooling companies. Like some is related to energy, but we don't invest directly to energy and utility because we think that's probably like topic right now, but like from like a long-term strategic perspective, we think AI hardware should be really tied into like large language model development and training and inference, all the data creation. All that computing power is what we need to really like higher monetization on this enablers.
Got it. So the energy stuff's a little bit too indirect. You want more pure play, which makes sense, I guess. And to follow up with another question, the dumb way to invest in AI, would it be just going all in on NVIDIA, or is there some other dumb way that people are investing in AI now that you think they will regret?
Well, we do hold NVIDIA in our portfolio, so I can see like top 10
You'd
companies.
almost have to, right? Yeah.
Yeah, you have to. So like there's no doubt like you can just play NVIDIA. Like, NVIDIA is one company, and NVIDIA has been up a lot. And we believe there's tremendous opportunity just beyond NVIDIA and Max 7, right? So imagine those application companies that's really generate tens of like revenue like right now, like then those are companies really growing very fast. We have seen that in the past few quarters. So those opportunities that investor normally just bypass if just investing single name, right? So we believe those 40 company is a great basket to capture the whole ecosystem, and you don't want to miss all those opportunity around like AI, right? So like I think there's definitely concentration risk in just investing in one company, and what if there's could be something wrong with the company. So the company specific risk is very high for that approach compared to a basket approach.
Yeah, that's the benefit of obviously an AGIX. Now, let me ask you, because you are doing a basket approach, and just like with venture capital, with everything, we've seen in life that a small number of stocks drive a lot of the returns. Hank Bessenbinder, a professor at Arizona State University, found that from 1926 to roughly the present, just 3.2% of US stocks made up 96% of the returns. The other half just matched treasuries. So it's a small number of stocks driving a large part of the gains, I guess is the best way to say it. That's true in venture capital. It's actually true in equity markets. Here's my question. It's a two-part question. By number of people, do you think, number of investors, do you think more people will win or lose from AI? And then by dollar amount, do you think more dollar investing will win or lose? And I ask that because if you go back to the 2,500 car companies that have come and gone in the US, there's a good chance. There's a good chance that more individual investors lost money on cars than made money. Do you think the same will happen with AI, both on a per person level and on a just sort of a capital weighted level?
I think it really depends like how investors are going to tap into the AI opportunity, right? So if you think about investors just like spend a lot of time like digging into like undiscovered opportunity out there, there's a chance that you can win big and lose big. So there's a lot of volatility around the chance of winning, right? Like when it comes to like harvesting the AI growth. But we believe like as an ETF company, probably the highest chance to get an average return from the AI is investing the most relevant and ready company that is ready to capitalize the AI growth. So just look at like history, like in the PC era, there's probably only 20 companies you should invest. And in the mobile internet, like another 20 companies you probably should. That's, I would say, 90% of the opportunity for that decade. So in the coming decade, we think AI is the play, right? So AI could be growing, accelerating faster compared to the PC and the mobile internet era. And how do you really capture that opportunity? We think it's only a handful of companies that are going to capture most of the value.
That makes sense. And just as I was asking the question, my own answer or feeling would be in the private markets, very, very likely more losers than winners, both individually and on a dollar weighted metric. In the public markets, because there are so few pure play AI companies, because the companies doing AI often have robust revenue streams that they can use to subsidize their AI efforts, you're probably likely to have a much better ratio of success to failure in the public markets compared to the private market. Not that I'm trying to plug your ETF per se, but it just seems like the safer way to invest.
Exactly. So for private, you have to be very smart and deep dive and like selective, I would say. I think for public market, the opportunity is obvious, and like there's a very like safer way, like or in terms of risk adjusted return to really get access and play the beta of AI is very important.
You guys are doing great now. Will the world need AI funds in 10 years? Or will AI be such a part of business life that it's kind of everywhere and it would be weird to have a specific AI fund by then?
Well, I think like it's like when you look at like internet, right? Like we were joking, like the whole Nasdaq is around like whole internet, mobile internet. Like just there's like we are talking about AI fund today, but like in I would say 10 years later, like you found Nasdaq is the AI fund because the AI fund is gonna be much bigger and be 90% of the market cap. So even so, that's why it's important to not just look at the Nasdaq or S&P because a lot of companies probably not going to be benefit from the AI at the current stage. So you have to be focused around AI to really let your portfolio gradually become the Nasdaq, right? So that's kind of like the play we think investors should do.
Interesting. So we won't just have AI funds, we'll have an AI exchange or almost an AI exchange in 10 years if AI keeps growing. On AGIX, right? Is that the correct AGIX? I got it. Which isn't here yet, but maybe soon. Scary and good at the same time. How often do you turn over or expect to turn over the shares, and what is the expense ratio?
So we have a quarterly review on on the portfolio. So the quarterly review including the AI score as well. So there's like a quarterly process to really evaluate all the metrics we have talked about. And for the expense ratio, currently the fee is 99 bips.
Okay.
Total expense ratio is 1%. One unique thing about this fund, as you mentioned private, so we partner with a partner, Atna Capital Management. So they're AI native investors and engineers who specialize in AI ventures. So one capability of the fund, it can invest up to 15% of the portfolio into the private AI companies such as Anthropic, Perplexity, etc. So we have that capability within.
ETFs can do so much these days. It's really amazing, actually. There's almost an ETF for everything, and I think it's to the benefit of investors because even though 99 bips is higher than a Vanguard fund, higher than an average fund, it's a lot cheaper than 2 and 20 for a hedge fund that might be doing something similar. Excellent. So if somebody, Derek, is watching this and says, all right, this is cool, I'm interested in AGIX or just learning more about Derek or more about KraneShares, where would you send that person to?
Well, you can check KraneShares.com/AGIX for more information about AGIX and generally on KraneShares.
Simple enough. We'll put that link in the show notes or probably on the screen as well. Derek, any final thoughts? If somebody is just a middle class investor and run of the mill, a very average risk tolerance, should that person be investing in AI now? Is it too risky, or is a little small allocation okay? Like, who is AI investing for?
I think AI investing is for everyone. Just look at like what happened over the last 4 decades, right? You have to really be like at front of the current wave of technology development to recapture the growth of your portfolio. So any growth-oriented investors who are seeking for long-term capital appreciation should look at AI as a great investment vehicle.
So in your view, if you're not investing in AI, you're probably missing out, probably potentially missing out. That's certainly been true of technology. If you hadn't invested in technology or internet companies over the past 25 years, let's say, you missed out quite a bit. Maybe that'll be true for AI, whether you invest in your own stocks that you've chosen or in a fund like AGIX. It sounds like that's your recommendation, Derek, for a path to capitalizing on the value AI will add to humanity. All right, sounds good. Thank you very much for sharing your thoughts with us, Derek. We'll go ahead and put those links on the screen. Thanks again for joining us. And thanks to you guys, as always, for watching us at home.
Thank you.